We are in the third lecture in understanding the basics of costing. Myself Vishnuvardhani. We have seen to these contents in the last two lectures. So this is what I told you. Hope you remember these classifications. I didn't mention on functional classification. That also we'll see in detail along with the association with product today. So this column was not right, so I thought I would give you the answer clearly once again, so that earlier slide was shown. Next, this was the exercise which I gave you. Hope you remember the direct material, the indirect material, direct labor, rent for factory, power, maintenance and expenses. So the costs were given for 100 units and 200 units. Hope you had calculated. We'll see whether your calculations are right. So this is how you have to first tabulate so that you can calculate well. So first, these things are the one which are already given in the problem. So you have to write it as A and B if you require. If you can remove this row if you become clear with the class calculations. This is for you to understand the classification, this row. Next, and write this problem. I hope you have already written and calculated. Now we'll check the problem for direct material. Please listen and check in your note as well. For direct material, so for 100 and 200 units is given. So we can find the variable cost. So the variation in the number of units is 100. So that is the next column, variable cost for 100 units. This is not a standard. This 100 is not a standard. It is calculated by 200 minus 100 is 100 units. What are the particulars that are given in the problem? Accordingly, you have to calculate and put the heading for this column, variable cost for 100 units. So first let us see the variable cost for 100 units, which is column B minus column B minus column A is your column C, which is variable cost per 100 units. So 18,000, I'm sorry, 1,80,000 minus 1 lakh, which is 80,000 given here. Next, indirect material, 20,000 minus 15,000 is 5,000. So 5,000 for 100 units. Direct labor, 7,500 minus 4,000, which is 3,500 for 100 units. Rent for the factory, so it does not change. So the variable cost is 0. Power cost, 16,000 minus 18,000. So it is 8,000 for 100 units. Maintenance cost is 7,500 minus 5,000 to 2,500 for 100 units. Then expenses, 5,500 minus 3,000, 2,500 for 100 units. So this is the variable component for the particulars given in the first column. Next, let us calculate the fixed cost. Fixed cost is calculated by total cost minus variable cost. So total cost for 100 units minus variable cost for 100 units will give you fixed cost, because total cost is equal to fixed cost plus variable cost. So total cost is fixed cost plus variable cost. So when calculating fixed cost, it is total cost minus variable cost. Total cost for the same number of units. Total cost for 100 units minus variable cost for 100 units. So it is column A minus column C, which we have calculated. So 1 lakh minus 80,000, this you get 20,000. Then again 15,000 minus 5,000, you get 10,000. 4,000 minus 3,500, you get 5,500. Here 25,000 minus 0, it is totally fixed cost. Next 8,000 minus 8,000 is 0. So the total costs are only variable cost for the power. Maintenance, 5,000 minus 2,500 is 2,500. Expenses, 3,000 minus 2,500 is 500. So Now I hope you, if the cost has variable as well as fixed component, then it is semi-variable cost. So the first direct material is semi-variable cost. Second, indirect material, it has variable component of 5,000 and a fixed component of 10,000. The total is 15,000 here. So it is semi-variable cost. Again, the third one, it has variable component as well as fixed component. So it is a semi-variable cost. In the fourth, rent of the factory, it does not have any variable cost. Variable cost is zero. If there is no variable cost, it is totally fixed cost. So it is fixed cost. Next, power, it does not have fixed cost but only variable cost. So it is termed as variable cost. Next is maintenance. It has both components, variable and fixed. So it is semi-variable cost. And the last also, it has both variable and fixed components. So it is semi-variable cost. This is the answer for the first question. Classify the cost as variable, semi-variable and fixed. So this column is the answer for the first question. And next, calculate variable cost per unit is the second question. So you have variable cost for 100 units. So you have to total this column C. The total is 1,0500 divided by 100 units. You get 1015 as the variable cost for 100 units. So the second answer for the second question, variable cost per unit is 1,1500 divided by 100, which is equal to 1015. Next, the third question is find the total fixed cost. So the total of this column is your total fixed cost, which is 58,500. This total. So all the questions in the given problem are answered. Classification, total variable cost per unit and fixed cost. So you have to see whether these answers are there. So this first is classification, fixed cost and variable cost per unit. So we have the problem gets over. This is the functional classification which was already discussed in the previous lecture. To understand the functional classification and see the application of the functional classification, we need to look into the cost sheet. Hope you remember cost sheet. Cost sheet has these components: prime cost, factory cost, office cost or total cost of production, then total cost or cost of sales, and next is sales or selling price. So it has these five components. So we'll go into the details. We already know what are the things that are listed in prime cost. So direct material, direct labor and direct expenses are the total of this is your prime cost. So 60,000 plus 20,000 plus 5,000 is your prime cost. Next is your fact. You are finding what are the various factory overheads. So this is direct material, indirect material, and next indirect labor, indirect expenses, and indirect expenses in the factory. So you are listing all this and adding these things, you get only this is the total of the factory overheads alone, the sum of this alone after prime cost. What are all listed is given as total factory overheads. We'll go to the next. So prime cost plus your factory overheads, which we have calculated, this 8,000, yeah, I'm sorry, 85,000 plus 12,100 is your factory cost, which is 97,100. So see, you're getting the format of the cost sheet. First is prime cost, then you're listing all your indirect things here. So you're getting the factory overheads and you're getting the factory cost. After that, you have to add the next one, which is your administrative expenses. So office and administrative overhead, it is called as office and administrative overhead. And the sum, so how to find this? This is 4% of your factory cost. So your factory cost is 97,100 into 97,100 into 4 divided by 100 is your factory cost. So I'm sorry, is your administrative, general and administrative expenses. So adding your factory cost along with your general and administrative expenses, you get your total cost of production. This is total cost of production, which is 1,98,000. I'm sorry, 1,984,000. 1,984,000 is your, if the 4 is not shown, 1 lakh. I will try to move that. Next is your total cost sheet. So this is your prime cost. We had your factory overheads here listed. Then factory overheads plus your prime cost is your factory cost. Then we saw on the last slide till this total cost of production. Total cost of production plus selling and distribution overhead, which is this value. This value is your what is that? Percentage of production cost or total cost of production. So it is 5% of 5 divided by 100 into 1,984,000 is your selling and distribution overhead, and adding the total cost of production and selling and distribution overhead, you get the total cost. So this is total cost of production and this is total cost. So you get the total cost. After this, if you add profit, then you will get your sales or selling price. So I have not shown it. So we saw 5 classifications based on element, based on traceability, based on variability, based on function, and based on association with product. Now we have the sixth classification, which is based on controllability. This type of classification is not used for regular work. It is used for decision making. When you want to do some decision making, when you want to find where the problem has occurred. So, and to have some troubleshooting and cost control and reduction, this type of classification is important. It is called as classification by controllability. It is very simple: controllable and uncontrollable costs. Controllable are costs that are influenced by the action of a specified member. So if this here some loss has happened, here some cost has increased, who is responsible? You can see the some person responsible for that. It is not for finding fault with that person. It is to identify who is the responsible person so that it can be improved. There is no cost in an industry which we can say as uncontrollable, but say some accidents happen, then it is something which is not under our control. So the distinction is not very sharp. It is usually all are controllable. Some uncontrollable things may have occur, but it may not be a particular individual may not be a reason for that uncontrollable cost. So next, so if a machine maintenance related problem has occurred, then foreman in charge is the responsible person. If the production was less, production person and the people working under that department are the responsible people for them. So we can see who are responsible so that the cost they can be found, and the proper training and analysis can for doing a better analysis and controlling the cost. This classification is made. So next type of classification is by normality. By normality, the costs are classified as normal or abnormal costs. Normal costs are incurred for a, say in a spinning mill. You always say you have a norm for the waste percentage. In carding, usually the waste percentage is 5 or 6%. Suddenly it becomes 10%. then it is an abnormal cost due to some other problem. So it should be a normal cost. And invisible loss may be less than 1% due to moisture. You would have studied in your PQC about the invisible loss that is happening in the textile industry due to moisture and some dust that is going off. So you usually have a norm that the loss due to invisible loss will be in 100, it will be less than 1%. So it's suddenly your abnormal, your invisible loss in your spinning mill is 4%, then it is an abnormal cost. This is not an usual thing that you expect. That is called as abnormal cost. So abnormally occurred is called as abnormal cost. So some evaporation losses will usually happen in chemical industry. So you expect 2% evaporation, but sometimes it has been 10%. Then there will be a weight reduction in the material. So you can't, which you have not expected has happened, and the cost involved in that is called as abnormal cost. So something lost by fire and theft, all those things are not expected normally. So these things are called as abnormal cost. We'll see the next classification based on relevance. This classification is important for decision making. Next, another classification is by relevance, whether it is relevant for a particular decision. Whether these two, when you have two alternatives, then which alternative to choose? Whether this cost, when you have two alternatives, whether you have to decide which alternative to take, say like make or buy decision, which are the costs that you have to take for taking that decision, is called as relevant cost. Which cost you need not consider for taking that two, among that two alternatives, which alternative to choose, you did not think of certain costs. That costs are called as irrelevant costs or function or sunk costs. So I want you to look into this example and come. We will see the further details on relevant costs and sunk costs detail in our next lecture, as we have short up the time. So we have seen the various classifications. I want you to revise the classifications. We'll continue and end the classification in the next class. I want you to do the problems that are given as well. Thank you for patient listening. The irrelevant costs are costs which are not you when you should not consider those costs when you take a decision. So you need to, like I said, as I hope I said yesterday on make or buy decision. When you take a make or buy decision, what all costs you should include and what all costs you should not take into account. So for that particular decision, whether it is irrelevant or relevant, is what is the meaning. It is all costs are relevant to some aspect, and to some aspect it is not relevant. So we have to consider that for that particular decision. For other decision, there is not like your direct or indirect, nothing like that. Here, whether it is material or labor, whenever it is a material, always for some industry, but here relevant and irrelevant are based on the decision which you take. So irrelevant costs are not important for decision making. You should not consider those costs when you take that decision, is called as irrelevant for that decision. So the example costs that are paid in the past that are already committed, you cannot escape from those costs. Those are called as unavoidable costs for that decision, and it is an irrelevant cost for that decision. When you can escape that cost, then it is a relevant cost for that particular decision. I hope you will understand with this example. So when you want to decide whether to manufacture product A or buy product A, then the irrelevant costs are where you would have done some research on how to produce product A. So that is not relevant here to take whether you have to make or buy that product. And the factory rent, whether you make or buy, the factory rent you have to pay. So these two are irrelevant for that decision. So it is called a sunk cost for that decision. Which decision? Make or buy decision, manufacture or buy. what is a relevant cost? Wages that you have to pay. Wages are directly related to producing the product. If you're not going to produce the product, you need not pay the wages because it is directly related. It is not a permanent employee. So you will hire only if that product has to be produced. So how much wages you have to pay, those things you have to take into account when you take this decision, make or buy decision. Next, then one more example. So you have a book value of a machine. Book value of a machine is nothing but when you have purchased that machine, you will uh, note that in the accounts book. And what is the value when you have bought it? You have bought it some 10 years back, some ring frame machinery for some lakhs. Then that is recorded in that year, and you find out that value to be some 20,000 for some machinery that you have purchased, and now that machinery you cannot use. It is like it is some difficult condition. So if you scrap that machine, then it is sold for 5,000. So now what is this cost that is sunk here, irrelevant here? So 20,000 minus 5,000, which is 50,000. You cannot do anything with that uh, machine. So the cost that has already happened, that is already depreciated, is called as sunk cost here. So there are not only these were the important classifications which we saw, and there are another classifications like capital and revenue based on the accounting period. So this is very much apt for your accounting related class. This type of cost classification is important for accounting, whether it is capital or revenue cost. As I already mentioned in the third lecture, the capital costs are costs that should not be taken into account for cost classification or finding the cost of a product. You have to only take the depreciation. That is what I mentioned as capital or capitalized cost. So this is used for your future benefits. You pay now, and the benefits are for a long term. Revenue are benefits that are for the current period. So it is based as revenue cost. So this is important for accounting. I just to highlight that there is one type of classification like this. I have mentioned it here. Then differential cost. Differential cost is the difference in cost between two alternatives. You are going to produce product A and you are going to produce product B. What is the variation between producing A and production of B? That costs are called as differential costs. So what is the output, additional output? What is the extra fixed cost for A or B? Those things you have to differentiate. That is termed as differential cost. This is also useful in decision making. Then next is opportunity cost. You should find at some point whether you are going in the right path, or what are the opportunities that you had lost instead of going for this selection of one course of action. So you have, after completing your BTech, you all may go to job, or you may go for as an entrepreneur. Say if you go for a job and if you get a salary, and if you are going to start up, make a startup, and you are an entrepreneur, you are opportunity for going for the job and your salary is lost. So what is the benefit lost by rejecting a placement and going for another alternative is your opportunity cost. So the benefit lost or the profit that might have been earned from the rejected alternative is called as opportunity cost. And say if you have invested if you're an entrepreneur and you have invested 1 lakh in the business, if you are not invested in the business and if you have kept it in bank, what is the interest that you would have got is an opportunity that is lost. So this is the opportunity cost. So an individual, say, which is the example which I told already. If you are taking up and startup. Next is marginal cost. Marginal costs are important when you have to take a decision on or whether to go for some extra product. How much volume you can accept for an order. What is your capacity? Say if you can produce 10,000 units. and your order has come for some 10,010 unit, 1 unit. It is not the case usually, but what is that cost for that extra 1 unit? Is the extra cost. You might have to invest a lot of machinery for producing that extra 1 unit. That what is that extra cost for producing that one additional unit is called as marginal cost. If the marginal costs are high, you should not go for the one extra additional unit. That's what, so it is useful in decision making. An average cost is the total cost for production divided by the quantity that is produced. The usual case, a simple average. This picture was taken from a book, and it shows the detail of classification of cost. The first one is your classification based on elements, material, labor, and expenses. Here it is given as service cost. Then we saw the according to traceability as direct and indirect. Then we saw the classification on variability, fixed, variable, and semi-variable cost. And then on we saw on what did we see based on as period and product cost, which is not given here, an association with the product. And next, based on normal cost, which is normal and abnormal cost, and we saw functions even before that as production cost, administrative cost, selling and distribution in total, and R&D cost. So the use of that, we saw all the uses of these except variability in cost sheet. And then classification based on controllability as controllable cost and uncontrollable cost. And here they have given some additional classifications also, which was used in planning and control as budgeted cost and standard cost. So what is that? Which this is used in cost control also. You budget something and you find what is the actual, and that you find the variation between these two things. And historical cost and predetermined cost. And next is for decision making, especially for decision making. Even though the other things are there for decision making, you have these costs which are especially used in decision making, which is sunk or relevant cost we saw, and opportunity cost we saw, differential cost and marginal cost. But we didn't see replacement costs. Replacement costs are costs that are incurred due to some change in the machine or some replacement of certain part alone. What is the cost for that replacement alone, you can find. So this gives you a detailed account of the classification of costs, and I hope you have understood the classification, and it is very important. So with this, we come to the end of our first course outcome. We will have a live session wherein I will clarify your doubts. So as it is the base for classification. So the frequently asked questions based on this classification are the elements of cost, classification total in detail, the difference between direct and indirect, fixed and variable, relevant and irrelevant costs, product and period costs, and the problems based on usually variability, related to variability, related to relevant and sunk cost, or your cost sheet, simple cost sheet classification. These are the things that may be asked in problems. So with this, we end the classification of costs. Thank you.